All right, well, greetings everybody. It's Max, and we are back here at Just Plain Crypto. And today we're going to take a look at what is going on with some legislation that you all may have heard of about the infrastructure bill. I know those of you who have been involved in crypto have probably heard about this, and people who have seen Reddit and things where there's a deal where everyone thinks the sky is falling, and we got to email the senators and all of this and put your 2 cents in. And it's like, it's good that people are doing that, but understand that these people don't care. They're going to do kind of what they're going to do. It sort of is dependent more or less on the factions that are paying these people off, who is going to be the winner, who's got the most money to pay off for the legislation that we want. And at the end of the day, it's really not too much worth worrying about, but we are going to cover it first. Though we will take a look at the markets. Everything's green, going good. Bitcoin's at 45.8. It's down a little bit. Not a big deal. Up around 40% over the last 3 weeks. And as I scroll down through everything else, the only thing that's having a hard time is Internet Computer. Imagine that. Imagine Internet Computer. What a great name for a token. Anyway, so we're going to go on and take a look at this. Now, this is going to cover, a little bit more of the freedom aspect for people out there, which is kind of what I want to center my stuff around here, is the reasons for getting into crypto. Now, this doesn't mean that, this idea that you got to cut yourself off from everything and go get 2 years supply of food and get a bunker, get your cryptocurrency and your gold and your silver, live in a Faraday cage, learn to use a ham radio, and all this. No. What I mean with cryptocurrency and freedom is, you can be into that as much as you want to. Just if you're purely looking for the financial freedom and a little bit of financial breathing room, you can just go in that far. Just invest in Bitcoin, throw $100 a week or a month or whatever you can. Whenever you got a little money, throw it into some Bitcoin and don't touch it. Pull it out when you need it. Pull it out when you're making a bigger investment into another asset or something. Or you could go all in and completely forget the Federal Reserve System, which would be, the ideal, of course, but not everyone is there yet. But this is what they're trying to do. They're trying to steal everybody's crypto because, it's funny. They make it seem like it's this big, huge deal that someone's got to do something, right? And you look at the market, and the cryptocurrency market is like less than 1% of the overall economic market. Okay, it's 2 trillion now. It was 1.3 trillion just a few weeks ago. It's not even a fifth the size of gold. Gold is like 11 or 12 trillion, right? They're not too keen on regulating that market very much, but we got to go after crypto. And the reason they have to go after crypto is because they don't control it. And little guys are getting freedom and don't have to depend on the system so much anymore. And you can't have that. Government can't have that. So we'll take a look at this article here about the legislation. This is called the infrastructure bill, I believe. And then they're tacking on all these, and we got to get the crypto guys, right? SEC chief tells Warren the agency should have more authority to regulate crypto. Now, the SEC is the Security Exchange Commission, and they regulate stocks. So when a corporation is formed, this is how this works, right? A corporation is formed. They decide arbitrarily how many issues of stock this corporation is going to have that they can then sell to people for funding their company. And in return, the people who buy the shares of stock that they created out of nothing, right? In return, they have the promise of giving some kind of a payout, some sort of a kickback. Your little quarterly earnings or whatever is what the stockholder or shareholder gets. And if the company does well, their stock is valued higher, right? And the people who own shares of the stock can trade them and all that stuff. Anyways, that's what the SEC deals with. And when a company creates stock out of thin air like that, it's called a security. And there are quite a few blockchain cryptos out there that would be considered securities. So they're not wrong on that. But the SEC wants to just regulate crypto. And it's like, well, the SEC has no authority to regulate a currency. Those things fall under different other agencies. But of course, the SEC wants to do it. You know, they're kind of the financial leg breakers. So that's what that is about. The head of the Securities and Exchange Commission told Senator Elizabeth Warren that the cryptocurrency realm needs further regulation and that Congress should give the agency and corresponding rulemaking authority. They just want more power. That's all there is to that. SEC Chairman Gary Gensler told Warren, a Massachusetts Democrat, in a letter released Wednesday morning that he shared her interest in ensuring investor protection on cryptocurrency exchanges. Anytime we're from the government, we're here to help. From the government, we're here to help. That those investors are adequately protected right now. Give us all your information, give us your photo ID, give us your driver's license, give us your passport, give us a retinal scan, give us your medical records. That's all for your good. That's all for you. He said that the SEC has taken and will continue taking its regulatory authority as far as it's permitted, which basically means if somebody is caught doing something bad, like Goldman Sachs all the time, right? Goldman Sachs is always manipulating the market. Other big hedge fund companies out there are always manipulating the market, and they're kind of allowed to get away with it because they're propping up the economy. But every so often, the SEC comes in and pretends like it's doing its job and issues a fine. And then Goldman Sachs, who has made billions upon billions of dollars manipulating the markets, I think it was gold, right? They got $1 billion fine for manipulating gold, and they probably made $30 billion manipulating gold. And they paid their $1 billion fine, and they're like, yeah, that's fine. And then, you know, the SEC's happy, and Goldman Sachs is happy, and you know, it all works out. You know, you got to pay the protection money is what it comes down to. The letter was in response to July inquiry by Warren, which she raised a number of concerns about cryptocurrency exchanges and platforms. And this is a lady who doesn't apparently know what cryptocurrency is at all. I don't know why she's really talking about it. She used to be a person who was for the little guy somewhat and against big banks. But Elizabeth Warren over here, Elizabeth Warren all of a sudden is deeply concerned about Reddit people inflicting damages to hedge funds. People on Reddit, right? So like 16, 17 to 25-year-olds on Reddit who are buying GameStop are damaging the hedge funds, and somebody's got to do something. The hedge fund's getting beat by 16, 17-year-olds. And the government has to step in to protect the hedge fund that is worth billions? That doesn't sound right. Especially on that note, Robinhood, the app, was selling the information about those Reddit traders' trades to Goldman Sachs or it wasn't Goldman Sachs. I don't remember the hedge funds that were involved in that GameStop thing, but they were selling the information to those guys so that they could counter each other's trades. They were basically selling the info, which is why I never believe in like shorting and betting on the market and all of these things, is because I'd have to assume that people are selling that data, you know? So companies and other people playing against you would know when you're shorting something and when to mess the market. I mean, all markets are in essence manipulated because people are involved in them. Me just buying a crypto, that's manipulating the market because I bought something that's going to make the market go up, right? Not everything is nefarious here. It's just how the market is. But it's not really an even playing field when you have these exchanges, or particularly it was Robinhood that was selling trading information to the sort of the competition of the Redditors for GameStop. But this is where she's at. And then, of course, you have Janet Yellen, who has taken $7 million from the banks for speaking fees, right? You know who these people are playing for. You know, that whole thing, the outside of the political realm, you call that bribery. But in the political realm, they call that lobbying. You understand how this goes. Now, there are other words for women who, you know, take money to perform acts, right? But we'll just call them businesswomen or politicians, right? It's illegal for us, you know, when you people are entrusted to do a certain job and you give them money to not do their job, right? Or to get preferential treatment or very preferential treatment. So that's what's going on. So that's what I mean when you know, sending letters and things like that to Congress, it's like, I guess their intern might be someone who's going to support you, the one who's reading it, but it probably never makes it to the senator because their phones only ring when it's Goldman Sachs or Chase calling or BlackRock. Yeah. Gensler also addressed so-called stablecoins, okay, which are a form of cryptocurrency that has their value tied to an asset class such as gold or fiat currency. The SEC wrote that the existing stablecoin market is now worth some $113 billion. Oh my gosh, we have to do something. It's worth $113 billion. Do you know that the Federal Reserve printed that today out of thin air? Just today? Wow, $113 billion. We have to do something. Now, stablecoins exist as sort of a gateway between when you want to swap cryptocurrencies, or if you want to take some money off the table out of a crypto, you can park it into a stable coin as opposed to cashing it out into fiat and then having to pay trading fees to go back in and put it back on the exchange. That's all it is. That's all it is. You know, Bitcoin went up by 40%. Now, some people right now are going to say, well, it just went up 40%. So I want to take my money in Bitcoin off the table in case it crashes. So then you park it in a stable coin. If it doesn't crash, you put your money back in. Okay? Very quick, very easy. But they don't like the stable coins because there is absolutely not one single reason you should ever need Federal Reserve notes. You can buy a stable coin and they give you 5% interest on your stable coin through staking. DAI does that, and Dollar Coin or whatever the Coinbase one is. So if you took your Federal Reserve notes that you know are decaying at 15% a year and you converted them all into a digital dollar coin on Coinbase, you'd actually would offset that by 5% because of staking and their rewards and staking. We'll do a video on that sometime. So they're mad about stablecoins competing with their Federal Reserve notes. And I don't have any problems personally on the whole thing, as anarchistic as I can get, with Federal Reserve and the IRS and all these guys coming in there when they want to regulate what happens with their Federal Reserve fiat money because they own the money. Okay, they own that money. But if they want to come in and try and mess around with, you know, taxing people on their crypto gains, it's like, well, you have to prove that you have jurisdiction on that first because you don't own that. Right? It's like holding gold, right? And then being taxed because gold went up. Like, you don't own the gold. You don't own the gold. But I digress. I am not a tax expert, nor am I a financial advisor. Just explaining how I see things. The use of stablecoins in these platforms may facilitate those seeking to sidestep a host of public policy goals connected to our traditional banking and financial system. That's what it is. You don't need banks, guys. And they know you don't need banks. So they are trying to stop it. Anti-money laundering. What is this? Can somebody explain to me what money laundering is in this day and age? Everything is digital. What exactly are we in the 1920s? Is Al Capone trying to wash his liquor money in Chicago? Is that it? Through legitimate businesses like flower stores and things like this? Is that really what's money laundering? Tax compliance, sanctions, and the like, Gensler said. It's funny they mention about sanctions. How we sanction other countries is we kicked them off the SWIFT system, and we did that to Russia, and they're like, fine, we'll use Bitcoin. Right? Anyway, they kick them off of SWIFT, and everyone's moving to cryptocurrencies, and we really don't care. Which is where this entire thing, the reason the market is still doing good despite this being on the table, is because people understand that it doesn't matter what the United States does, what kind of regulations they want to put through. Okay? Crypto is not going to go anywhere, and the United States is not the only country on the planet. Treasury Secretary Janet Yellen recently held a meeting with federal regulators to discuss the need to come up with plans to regulate stablecoins. In her letter to Gensler, Warren expressed a number of concerns about digital assets which have exploded in popularity in the recent years. Well, we can't have that. Bitcoin, the largest such cryptocurrency by market cap, has inflated from one coin being worth about $1,000 in early 2017 to over $45,000. Sounds like a pretty good investment. At least they have that one right? Warren said that during the 6 months of last October until this March, nearly 7,000 people reported losses from cryptocurrency scams. I would think that the number would be higher than that, but hey, if they're going to go with 7,000, then great. You know, people get scammed all the time. How many people during that time period got scammed sending money to some guy in Nigeria from an email? How many people have used the Federal Reserve System and they've been scammed? How many? The very fact that they know that it was 7,000 people and how much money was there is because it was on the blockchain. It was on the blockchain, and they can track a lot of things on the blockchain depending on the coin that you're using. Gensler said that he thinks the United States needs more resources to protect investors. Think of the children. Think of the children. As cryptocurrency trading and transactions increase, that additional authorities are needed to ensure the regulations are being followed. Hello. Prepare for the next Alphabet Soup Club, cryptocurrency CIA organization, whatever it's going to be. Out there to protect the children and investors from crooks and the Russians and China, or whatever they say. That's just what they want to do, and the people in crypto can pay for it all, right? Regulators would benefit from additional plenary authority to write rules and attach guardrails to crypto trading and lending. Well, of course, regulators would benefit from everything. Regulators would benefit from just having, you know, my account information, and then they could just take the money out as I get it. We stand ready to work closely with Congress, the administration, our fellow regulators, and our partners around the world to close some of these gaps. Wait, we're going to work closely with Congress, the administration, our fellow regulators, and what about the people in there somewhere? You know, those people you're supposed to be, you said you were protecting, you know, for the children and all that. You're not going to get together with people that are actually doing crypto and have been doing crypto for 10 years? You know, some of the big mining organizations, some of those things? No. It's a cabal, guys. It's a cabal. The letter follows a congressional battle over IRS tax reporting requirements in the cryptocurrency realm. Yeah. Well, this is another reason nobody takes it seriously, because in this bill, this infrastructure bill, effectively any time you touch any cryptocurrency anywhere, there's supposed to be a tax filing. Right? Like if you run a mining machine, or you run a node, or whatever it is, if you touch crypto in any way, shape, form, or capacity, you're supposed to file taxes, including if you make crypto wallets, like hardware wallets, and you make hardware machines for crypto, you're supposed to collect tax information and collect all this for every single person. And it's like, and trading pools and all of this stuff. And it's like, no one's going to do that. You can write whatever law you want to. It's never going to happen, right? So it's another reason that it's not even really to be taken seriously. Cryptocurrency advocates say the language in the bipartisan infrastructure plan that expands the IRS reporting requirements in an effort to recoup billions in revenue could hurt blockchain software developers, cryptocurrency miners, and other parties. Well, it could if they chose to stay in the United States, which they wouldn't. Nobody would be in the United States, including myself. I'm not going to put up with that. Why should I? But it's interesting language that they use here, that they're going to recoup billions in revenue. You mean steal it. You mean steal it. The government didn't make that money. The government didn't invest in Bitcoin. The government didn't create Bitcoin. The government didn't create Ethereum. The government did not create these things. So when they say recoup billions, they mean steal. That's what they mean. Bipartisan group of senators attempted to amend the provision using unanimous consent by narrowing the definition of broker in the bill. Something perfectly reasonable to say that if you're a miner, that doesn't apply to you. The move failed after Republican Richard Shelby of Alabama blocked it following a dispute over additional military funding. Yeah, the guy wanted $50 billion more military spending. It doesn't really matter. Despite the failure, the price of cryptocurrencies has been trending upward over the past week. Bitcoin was up more than 2% on Wednesday and hovering around 46,500, its highest level in months. Ethereum was up nearly 4%, and Ripple has soared 11.6%. Well, good for XRP guys. Good for them guys. I want to come back to this freedom aspect. These guys were doing this bill. The only reason I even took note of it or cared about it, my ears perked up a little bit, was because they were doing this bill on Saturday. Now, Congress works like a week a year, right? They're always on vacation. No one's ever there to vote on anything. And they're doing this special thing on Saturday to try and pass this through. And it's like, I just got to go back to the Creature from Jekyll Island, where they're waiting for a holiday weekend when no one's around to vote on anything to try and push crap through. And they were actually working on Saturday and Sunday to try and do this, and they opted not to vote for any amendments and just sent it off to the House of Representatives, and we'll see what happens with it there. But what it all comes down to is we can't have people being free and financially secure, and the even bigger thing is we cannot allow something to be out there that we do not control, right? Being the government. We can't control it, and there's no way... There isn't any way that they can stop it. There is nothing they can do. All of the king's horses and all of the king's men, can't smash Bitcoin. It's not going to happen. Now, these other blockchains that are out there, yes. Reason that people like the Bitcoin, decentralization, and can't stop it. Now, you look at some of these other ones out there that are, like right now, Ethereum especially is really, really good technology. However, it is completely centralized, and it is about to get even more centralized when they go off of mining, which is proof of work, and they move to proof of stake. You basically have the whole thing run on Amazon web servers now and Vitaly Buterin. So something happens to Vitaly Buterin in a boating accident, what's going to happen to Ethereum? Imagine it would keep running, but then who would be running the show? And if they want to make changes to Ethereum, what happens on Bitcoin and proof of work systems is the miners have to vote whether or not they want changes to go through. And when you're a proof of stake company, it's just kind of whoever the guy is in charge, you can just say, we're going to change the network to do this or that or the other thing. And I can definitely see Ethereum being the new world token coin, whatever they want it to be, but it's not going to happen with Bitcoin. And as I said before, there's too many big players, and because there's no head of the snake in Bitcoin, it's only growing and growing and growing and growing and growing, getting bigger and bigger and bigger. Sound hard money that appreciates at 200% every year. Every year. Essentially guaranteed to go up, not financial advice, opinion. Then they got some problems, because we got this little lifeboat out there with the big Bitcoin sign on it. And the old Janet Yellen and the Warren lady and Gensler over there at the SEC, they probably don't care. They probably own Bitcoin. They probably own cryptocurrency themselves, but they've been paid the big bucks by the banks. And that's all on record. People can look all this stuff up about getting $7 million in speaking fees from Chase and Bank of America and all these guys during the lockdown for a half-hour Skype meeting. They're getting paid $7 million bucks, right? So you know who they're working for. The good news is you don't have to care, because they can pass whatever stuff they want to. Your money is on the internet, and that's not locked between borders, right? The very idea of taxation in that regard is silly, even when you're transferring cryptocurrencies. And that's the other thing. DeFi is huge. That is the future. DeFi is decentralized finance. Okay, the future, guys, if you want to buy something that for whatever reason they don't allow in the United States, and there's quite a few, there's tokens, there's nothing illegal about owning these tokens. You just cannot sell them in the United States because they're considered securities by the SEC. And the exchanges don't want to handle tokens that might be considered securities by the SEC because they don't want regulatory problems. That's only a problem if you're in the United States. Okay? You can use a decentralized exchange and go buy these tokens. And you can trade your Bitcoin for anything. Anything. You can trade your Ethereum for most things, okay? And you can just swap. There's no borders. All this stuff takes place on the internet through the different blockchains. And these decentralized financial organizations aren't central. They're not running on servers in some country. It's a cluster all over the place. Eventually, it's going to be where I can transact and trade my Bitcoin from my wallet to somebody else in their wallet. And, you know, that's going to be the future. And you're going to tell me you're going to try and clamp down and make people do KYC and tax all that stuff? I'm saying, you know, you can try. You can try. Of course, always obey all the rules and regulations and everything for your state, your jurisdiction, whatever you're in and whatever they tell you to do. But, you know, you got some crypto, you very much have to reserve your right to get up and go. All right? And that's about what I have with that. And it's like, think of it this way, guys. If you're it doesn't take very much money invested into cryptocurrency to where you could actually live off of it, okay? Depending on where you live and depending on your standard of living. My standard of living isn't super high, but you know, I could within a couple of years I could easily live off of cryptocurrency, okay, and have a way better living, just the way that things compound and how fast crypto goes and everything. And it's like you can pretty well buy your plane ticket on your private jet and not deal with COVID and head over to El Salvador or head over to Nicaragua or even just Mexico. I could drive to Mexico. You know, it's a possibility. And it's not like you have to deal with these converting your Federal Reserve stuff and paying your Federal Reserve duties, and you can only take so much money out of the country and all this other nonsense. All that stuff is going bye-bye, and they know it. They know it for a fact. These guys like Yellen, they just want to get paid and then do their little talking points of the little spreadsheet that the banks print out that tell them to say. All right. And then they go up there and then, you know, they did their job. Like I said, they probably all own Bitcoin. So with this stuff that's coming up, yeah, they want to steal your crypto, right? They want to steal the fillings from your mouth. Right? These guys want to take everything. Everything. And just saying, no time to be in the markets like now. Because who knows what's coming down the pipe. You know, a year or two from now in America, who knows what all you'll be able to buy. Right now there's something like 6,000 coins on the market. You know, maybe in a few years that the only ones that'll be allowed in America to easily purchase through Coinbase or something like that is going to be like Bitcoin and Ethereum and a handful of others. So that is what I have with that. We'll look at our dollar cost averaging. I looked at it today, and my DCA example bad is actually beating out my good example. 10.7, so I made $77. It's Wednesday, so 2 days. 2 days made $77, so almost an 8%. Made 8% in 2 days, guys. 8% in 2 days. That's like a really good money market to do 8%. Right? But even better is my DCA example bad is at 1141. Look at that. Look at that. My DCA example bad is actually looking pretty darn good. It's a bull market, though, so you can invest in just about anything. And they're going to make money. They're going to go up. Bitcoin goes up. Everything goes up with it. The reasons for it going up is XRP. For a lot of the people who are fans of XRP, I personally don't like it for a variety of reasons, but nothing against people who like XRP. XRP pumped massively, 27%. So I only invested $200 and it made $55. So that's the big reason. And also Dogecoin, which I don't have too much of a problem with. I have $483 initial investment into Doge, and that went up 12%. So that's $62 from Dogecoin. So Dogecoin, hey, I'm just looking pretty good, right? So as I said, this is why I'm not a financial advisor. See, my picks, they're not doing as good, right? Anyways, with that, we are going to be out of here.